Hello traders, welcome back to new video in our exciting series. I am Sanjay from Tribe International and I am thrilled to continue this journey with you. Tribe Hub, where financial empowerment begins. This session is powered by Tribe Hub, a place for all financial education, a initiative by Tribe to empower traders with knowledge, tools and community support to excel in the financial market. In this video, we will understand why you need a trading plan, and in later part I am going to show you how you can build a strong trading plan step by step for forex trading. Make sure to watch the video till end. Video part 1. In this part we will going to cover some theory plus basics on how to build a trading plan and why it is important, along with its some component. So let's get started. If you fail to plan, then you have already planned to fail. This is a very common saying regarding trading plan. So many people spend their time and focus on trading instead of planning a trading path. A normal plan that covers the basics is just not enough. What you actually need is a strongly confident plan that lays out each and every minor detail and prepares you for all possible scenarios. Survival is better than failure, and it should be your first goal as a new trader to protect your capital and plan your each step and action in the market. What does trading plan means? A trading plan defines what is supposed to be done, why, when and how. It covers your trader's personality, personal expectations, risk management rule and a trading system. Trading system means your strategy. It can be anything. A trading plan is nothing but a roadmap that guide you to take rational trading decisions and help you stay disciplined. Now, why we are focusing so much on this trading plan? So, the need for trading plan is a trading plan removes any bad decision making in the heat of the moment. It means when you are driving without a GPS and you do not know the way perfectly, then there might be possibilities that you may take a wrong turn or you may go off the track a little bit without the help of GPS. So trading plan is like a GPS. It will gonna help you drive in the market carefully. Your emotions can consume you when money is on the line, cause your emotions can consume you when the real money is on the line, causing you to make irrational decisions, and you do not want that to happen. The best way to prevent it from happening is to minimize thinking in the live market by having a plan for every potential market action. What you are doing is you are planning each and every step before the market is opening or before you are taking a particular trade, before your entry has been triggered. Okay, many times your analysis get affected when you are analyzing it in the live market or when you are just analyzing for the present opportunity. You saw a spike and you are planning for it to buy. So this is not what you need to do. What you need to do is you need a separate window of time to plan each and every step, and then you have to execute it in the live market. Okay, so having a trading plan is crucial because it helps you make informed decision, manage risk and stay consistent in your forex trading approach. Remember, 90% of traders don't make it. You want to be part of that special 10% that does make it then you need to have a clear plan, unless you are likely to make impulsive trades driven by emotions. In the fourth video in this series, we have discussed some elements of a trading plan like trading goals, risk capacity levels, and trading strategy. But those are just theory unless you know step by step how to identify and make it by your own. To plan these three elements, we have to create two separate plans. First is fixed plan and the second is variable plan, or you can say daily plan. Fixed trading plan in forex trading. So a fixed forex trading plan provides a structured approach to trading by outlining specific guidelines, rules, and strategies that you have to consistently follow. So here is a detailed trading plan. Okay, so to create your own, what you have to do is you have to just take pen and paper and plan as I mentioned to you in this video. First of all, just decide in which market you are going to trade. So as of now, we are using it for forex market, and in that forex market also we have to identify which currency pairs or which type of instrument we are going to trade. So basically there are some major currency pairs which are frequently traded, and there are minor or exotic currency pairs which are less frequently traded, and they are a little bit kind of low liquidity pairs. Alright, so as of now in this trading plan, I have selected forex market, and in that forex market we are trading in only 5 or 6 major currency pairs like Euro USD, USD JPY. Alright, second point you need to identify is that how much capital you are putting into that kind of trading. Alright, so as of now we are putting around $10,000 of capital to start trading in this segment. Then you need to understand what is your trading style. You have to write it down. Either you are going to trade intraday, either you are going to trade swing, or you are investing that 10,000 capital. Alright, so these all 3 or 4 kind of categories are different from each other. So specifying each one of it is very important, because after that you have to plan it accordingly. If you are trading in intraday, then your rules and your plan will differ from someone who is not trading in intraday, or he is just interested in swing trading. Rules and conditions for planning will be a bit different in each kind of style. Plan, we are using intraday setup. Alright, then we have to identify what is your trading goal, what you need to achieve by doing trading. If you are saving, for example, for let's say your education, your child's education, or your health care, it can be anyone's for retirement fund. So anyone who is starting investing or savings, they are specifying their goals. So in the trading business also, you have to define that what is your goal in terms of percentage of return. Okay, so in this plan we are aiming for 5% monthly profit on my capital employed. So I want to earn 5% on 10,000 capital per month. This will be my short-term trading goal. Then you can decide what is your annual growth target. So I would like to increase my trading capital at least by 38% minimum in a year. Alright, so this is how you need to mention in writing. Next thing is risk management. This will be the crucial component of your fixed trading plan. So fixed trading plan is position sizing risk. What is your risk per trade? This is fixed. You are not going to change this information in day-to-day basis. Okay, so that is why we are considering it in a fixed trading plan. So position sizing risk, according to this plan, we are taking 2% as our standard risk per trade capacity. Then what will be your risk to reward ratio? What amount of profits you are aiming for in each trade? Let's say if you are risking $1, then you need to make minimum of $3. If the risk to reward ratio is 1:3, if the ratio is 1:5, then for every 1 rupee of risk you need to make 5 rupees, or $1 you need to make $5 at least. You are not settling for less than anything than your decided risk to reward ratio. This will gonna help you achieve consistency plus maintaining a healthy trading account. Then in the risk management plan, will you be using diversification, means you are trading with multiple pairs, or will you be hedging? Yes or no? That is a big question that you need to write it down in your forex plan. Let's say if you say yes, then you always need to trade with the hedging positions only. You will not going to buy anything naked. Alright, you are not going to simply create a normal buy position. You will always be using hedging. Then moving ahead, you have to plan for advanced risk management. Okay, what will it be? These are psychological factors, but a rule of thumb that you need to obey and have a proper plan for it. Maximum losing trades in a day. If you have set it on 3 losing trades per day, you can tolerate 3 losing streaks consecutively. After that, you will not going to take trade anymore for that particular day. So this will gonna help you avoid end up losing a significant amount of capital in one single day, and it will gonna also stops you from making reckless decisions. Because what happens in 4th or 5th losing trade, you will gonna enter into the revenge trading mode, and in that revenge trading mode you want to cover all of your previous loss very quickly, and in doing that particular kind of thing you will end up taking a very high leverage, or you will end up taking high quantities, and you may not follow your own risk management rules. So to avoid that kind of irrationality or erratic behavior, we need to decide that how much losing trades you can take up for. After that, you will not gonna trade anymore. Similarly, how many losing days in a week, consecutive losing days in a week, means back to back. If you are losing for 2 days, then what you will do is close your trading terminal, and you will identify what is your problem. Is it the market or is it the trading strategy? Alright, you will evaluate, you will learn for new concept, and then start afresh in the next week after taking a good rest. Because with a fresh mind you can take good rational decisions. If max 2 days straight losing trades, then close the terminal. Very basic thing. Okay, this is how you can control unnecessary actions. Next is profitability maximization. So till now in the fixed trading plan we have covered how you can manage it and how you can manage the risk, but now you also have to plan for profitability maximization. And how you can do it is you can note down what will be your target level techniques, how you are identifying the targets. Okay, that could be some kind of logical thing to do, because some people only take measured move, some people tries to trail their stop losses. All right, so some people take previous resistance level as their profit targets. Okay, or some people just ride it unless and until they get a signal for short sell. All right, so this will gonna help you go beyond your risk to reward ratio and achieve a bonus in the risk to reward. All right, Fibonacci levels are also being used by many traders, or you can say channel resistances works very well for profit targets, okay, and trailing stop loss level. So in this plan I have been using like 20 EMA as the trailing strategy. If 15-minute candle is closed below 20 EMA, if I am long and 15-minute candle closes below strongly 20 EMA, then I will gonna stop out my trade there. Alright, so this is how you can many people can use like previous swing highs or lows as their trailing stop losses. They always keep moving their stop loss levels onto each successive highs or each successive lows. Alright, so these are profitability maximization techniques. Now you need to lay down the technique of analysis. What kind of analysis you are going to use? Let's say if I am using technical analysis, then you have to mention that what is your strategies category. So in technical analysis also there are several types of categories. So first is breakout. If you are interested into trading breakouts only, then you have to mention it so that you will not end up taking any other strategy into use while trading in the live market. Then reversal is also a good trading strategy. If you are into reversals, you understand reversals very much, then it will be a good thing to do to trade with reversals only. Or if you are a news based trader, you are combining fundamentals and news to initiate your positions, then you have to mention it. Or indicator based means you are getting any signals for buy and sell from software or a algorithmic system, then you have to mention it in your fixed trading plan. And the question is, will you include fundamentals for your intraday or not? You also have to mention it because that will gonna impact the decision making in your trading plan. And at the end you have to define entry and exit criteria in detail. Alright, it can be price action structures, and you also have to mention what will be your entry and exit time frames. Okay, then will you be including indicators or will you be considering volume actions? All of these factors need to be noted down in the fixed trading plan. Then in the last you have to mention what will be your platforms and tools for planning. Okay, so analysis platform is best that I use is TradingView. You will get most of the features there that you need to analyze any type of chart. Then you can use any alerting software. If you are not using TradingView or any other software, then you will need a alerting software. Alerting means whenever your desired level of price is trading in the market, then you will receive a notification that will gonna help you in staying updated on market movements. Alright, then you need a good trading broker, so you can use Thrive. Alright, and that needs to fulfill your execution criterias. Okay, then pair screener, there are multiple currency pairs are listed, so either you are using a software to screen for your setup in those multiple currency pairs, or you are screening it manually. You are looking at each and every chart and then finding out that which currency pair you need to trade in. So these are some platforms. Or you can use pips calculator and position sizing calculator to get an ease of access in your live markets, because calculating each and everything manually will not gonna help you, right? So these are the platforms or tools that you need to plan for. Make a browsing folder where you save all of the links and you can access it very quickly in the live market. Okay, and at the end you need a events calculator plus a reliable source of news and updates to stay updated on the economy and the currency pairs you are trading. Okay, then we need a plan of plan. What is plan of plan? Means planning for the daily plan, when you will gonna do the daily analysis. So let's say I do every 6 p.m. I will initiate my research for the next day. Then you can select a day for weekly analysis, overview of all of the economic events and currency pairs. So this is once in a week thing, so I would like to do it on Sunday, as on that day we have a lot of time, plus the cycle is continuously updating on every week. On Sunday you can choose any other day also. On monthly analysis and review, so you have to plan for monthly analysis, like you are considering factors which are very time consuming. Okay, any kind of calculation you need to do, or you can review your portfolio of investment on every month to month basis. Then what will be your daily trading schedule? Most active trading hours you are trading in, and you are avoiding low liquidity and non-active hours, or doing something else in that hours is important. You need to mention it. Okay, and then how much breaks you need, and breaks are compulsory to maintain a mental disciplined level, plus journaling time. At what time you are going to record each and every transaction you have initiated in that particular day. So it can be before bedtime or in the evening after the market is closed. You can note down each and every action that you have took in the day. Alright, or you also have to allocate or plan for your backtesting plus practice, because that the continuous learning part will never gonna stop. There is learning each and every day, so you have to give a little bit of time for that and to backtest new trading strategies. Fixed trading plan is a chartered document of your trading activity. It's like a memorandum of association of company. So make sure you create it in a proper and structured way. Now we will discuss daily trading plan in part 2 of this video. Daily trading plan. A trading plan is a structured approach to trading that outlines specific actions, strategies, and criteria for a single trading day. It serves as a roadmap for traders, helping them to prepare for the next trading session, execute trade effectively, and make informed decision based on their analysis. A daily trading plan gives you an outline so that you do not jump from one thing to another randomly. When you write down each and everything in a structured way, then you can execute it more effectively. So let's see how you can create your own trading plan. So first of all, we'll start with date and day. Then we will try to identify the major market events. Major market events can be fundamental activities. Okay, many datas are being published on day-to-day basis. So those datas will have a higher impact on the currency pairs. So you need to identify what are the upcoming major market events and mark out that which event have higher impact on the respective currency pair. In this way, you will know that either you need to trade on that particular event or you should ignore trading in that currency pair. If the fundamental factor shows inherent bullishness in that particular currency pair, then you would like to initiate long strategies. Okay, so you have to plan accordingly. And if there are mixed data points are coming in, there is some data points which are showing bullishness and some data points which are showing bearishness, then what you have to do is you can conclude that you should not trade because the volatility will be very high due to those mixed events. Alright, so this is how this will gonna help you select the currency pair which have a required kind of volatility. Next is to mark down any big news coming into the market. It can be anything about interest rate, about markets hitting all-time highs or lows, or federal bank rate decisions pending, and all of the events or big news which can impact the economy as a whole. And if the economy as whole is impacting, then we know very well that it will gonna reflect in the currency pair also. So that is why you need to initiate your daily trading plan from major market events to big news first. Then moving ahead, you have to observe and write down previous day's market action. What the previous day action look like. So for example, USD chef hit range resistance zone and formed a doji bar. It reflected a range bound trading session in USD CHF. So you knew that the previous day movement is this, and now the doji bar high low is very important levels. So you can mark it down and plan your strategies accordingly. So that is why for every currency pair you need to have a general idea that what it did a day before. Alright, then moving ahead, you should initiate with trading setups. So trading setup involves finding out which currency pair is offering you suitable trading opportunities. To find out which currency pair is offering you good trading opportunities, you need to go to your charting platform and identify that which currency pairs are forming a suitable opportunity. So let's go to TradingView and scan some currency pairs in a step-by-step manner. So first of all, you need to create a watch list that contains your desired currency pair list. Then one by one, manually, you have to select and write down the actions of these currency pair. So as of now, in USD JPY 1 day chart, I will be looking at. Okay, and then if I want to know its direction, then it's very simple that it is in a small uptrend on day chart, and if I am seeing it does not have been trading at any significant support or resistance level as of now, and the resistance level is a little bit far away from the current market price. So if I go to a little bit of lower time frame and see what is its structure going on, so I can mark it out as a channel forming as of now. USD JPY, it's a little bit high in the zone as of now, so we should wait for a move down towards this channel support area to initiate new long positions if it forms a good base around this level. Okay, so this is my plan for USD JPY. Okay, and of course we have to confirm it with further market actions, but still it does not have any near possibilities as of now. We need more price action to take entry in this one. So moving ahead, USD JPY is not suitable as of now to trade in. Then what is USD CAD is showing? USD CAD is in very good uptrend. Okay, and it is forming a little bit of base around the highs of this level. So what you have to do is you can go to your trading plan and write down that you have identified USD CAD as a good opportunity. Okay, then you have to write down its trend. What is its weekly trend? So weekly trend is upside, it's bullish in nature. Then you have to identify its daily trend, and we have seen it is also upside. Okay, and on trading time frame trend, as I have mentioned you, 30-minute will be my trading time frame, so it is range bound as of now. And you can also write down a little bit of description about how it is forming its structure and what you can do about it. So what we have observed is it is forming a horizontal resistance zone is formed at a certain price, and you can initiate a breakout trading setup. Okay, so this is your plan as of now in USD CAD. Next is you have to identify key support and resistance zones. So go to TradingView again and mark out some good support and resistance zones. So the obvious zone I am looking at is this previous swing high. Alright, and on the minor time frame, if I just use a trend line, then you can draw it like this. Okay, so here if it does not give a good breakout in the near future, it can retrace towards this demand zone or support zone, form a base here, and then again resume its uptrend. So if it does not, so my first possibility is a breakout. If it does not, then I have a second plan ready based on a reversal of these swing levels. Okay, this support zone will be acting as a demand zone. Alright, so this can be a very good trading plan. I have planned each and every scenario. Now what you have to do is you have to identify and write down these support and resistance areas. What will be the resistance area? To find out resistance, I will be using a simple channel line by connecting these previous swing highs. Okay, so these are my resistance areas. First resistance is this one, marking it with red color so I do not get confused. Then we can use a Fibonacci level here. So these will be my resistance areas, and there is some support zones forming around these levels. So you can also use simply pivot levels, power pivot levels. In the indicator section, you can search for pivot levels and automatically you will see some important support and resistance zones marked on the chart for each and every day. Okay, after marking support and resistance areas, what you have to do is you have to mark each and everything on the chart, because chart will be the primary thing that you will be watching in the live market. Alright, so having each and everything written on that particular chart is very helpful. After that, you have to plan your trade. What will be your entry level? Mark it on your chart. What will be the stop loss? Because that is where most of the traders do not plan their action. They do not plan for their stop losses. Then you have to identify how much quantity you have to buy in that particular trade, because buying reckless quantities will gonna disturb your risk to reward ratio, plus it will gonna affect your psychology and risk management scenarios. Then you have to plan for exits. Exit can be targets or stop loss. All right, so that will be your trade planning. And after doing all of these things, just create a new watch list and add that particular USD CAD into that watch list and set alerts. So how I will be setting my alerts is, if I am seeing that this is my breakout level, then I am going to simply set an alert at this level, so that whenever this price moves from here, I get a prior alert and I will get a time to set my entry order here. Alright, after that, what you have to do is live market activities. Live market activities, like you have to check your planned analysis with the current market movement. Most of the time what happen na, that whatever you have planned, whatever currency pair you have selected, and you should select 3-4 currency pair at least and find opportunities in them. I have just given you an example for one currency pair. Alright, but you have to find multiples. So if one currency pair in the opening itself have given you a big gap up or big gap down, then it will gonna make our trading plan disqualify because of those gap ups and gap downs. So make sure you have to verify it and check that all of the currency pairs are within your parameters. Then you have to check if any alert has been triggered. If any alert has triggered, just go and see the market action, and after that set the pre-orders, like entry orders, stop loss orders you have to set. Then after your trade has been triggered, after your entry has been made, what you have to do is you have to monitor those running trades. You cannot leave them. Your work has not stopped yet. You have to monitor by watching it live, or you can set more alerts for further price movement. Let's say you have an entry at this price. So what you did is you have set your target here, plus you have set an alert around this level also. So if your target order does not get executed, at least you are getting a notification so that you can check it in live market that your order is executing or not. And do same with the stop loss levels also. With the help of alerts, you can reduce your screen time and still keep the market watch. Then if there is some changes going on, the market is not moving according to your planned action, then you have to adjust your positions accordingly. You can add up or you can reduce the quantities according to the market action. Then there will be post market activities. After you have completed your day for trading, you have to still do some work, which is comparing what you have planned and what is the actual market movement and what you did. Did you followed your plan or did you abandon it? Okay, and then write down all of the executed trade and mark the non-triggered trades in a separate page so that you can keep those in track for the next trading sessions. Alright, and write down your observation, calculate the PNL activities and learn from any mistake that you have made, and simply repeat the process of daily planning and plan for next trading session so that you can achieve a sustainable, consistent result. We have already discussed what are the benefits of a daily trading plan, but again, to remind you, let's discuss it again. Building a daily trading plan improves discipline. It will clear your plan of action. It will gonna show you step by step approach to trade in the markets. Okay, it will gonna help you take better risk management, and it can also enhance your decision making. You know that you are not going off the track. It will gonna boost your confidence, and you will take instant decision, a split second decision. That is what required in trading. And if you are going with a structured plan, writing down all of your trades, then it will gonna help you learn new things and take control in your hand. So start building your trading plan today and see the change in your trading activity. That is all for this video. Make sure to subscribe to our community channels to stay updated. Thanks for sticking around. If you found this video helpful, there is plenty more to come in our series on Forex and technical analysis. And don't forget, for all your trading needs, visit thrive.com. For more in-depth trading education, head over to thrivehub.com. Thanks for watching, happy trading, and I'll see you in the next video.